The government has just announced the new family home scheme, which will allow you to get into the market with as little as 2% deposit. But that's not all. Good news comes in threes. They also announced enhancements to the First Home Super Saver scheme and additional spots being made available on the First Home Loan Deposit scheme. In this video, I'm going to take you through these three big announcements. I'm going to show you what it means to home buyers in 2021, and I'm going to show you my double down strategy, which means you could buy a home with no deposit. Yeah, legit. I'll take you through the example. It's wild. So let's dive right in. So there's been a new family home guarantee scheme that's been announced by the government, where similar to First Home Loan Deposit scheme, the government will act as your guarantor. The difference is you can borrow up to 98% of the property's value, meaning you only need to put in 2% deposit, the government acts as your guarantor for 18, and the bank throws in the rest. So the family home guarantee scheme is aimed at single parents and will release 10,000 spots over a 4-year period to get in the market. So what are some of the criteria? So the program is based on the First Home Loan Deposit scheme and has the same property price caps. But unlike the First Home Loan Deposit scheme, new home guarantee scheme will allow single parents that are either first home buyers or have been previous home buyers, with the caveat that they can't currently be owning a property. Are you eligible for the single parent family home guarantee? So there are going to be a number of tests, including income eligibility. So similar to First Home Loan Deposit scheme, you need to be earning under $125,000 in the most recent taxable year. Applicants must be Australian citizens aged over 18 years older. The 2% deposit rule is pretty interesting because unlike the current First Home Loan Deposit scheme where you need a 5% deposit, you only need 2%. All right, so let's go through an example of the new family home guarantee scheme. If you're looking at, say, doing a house and land package in Queensland, for example, land's $200,000, construction costs are $250. I've included $1,500 for solicitors' fees, and you're borrowing 98%, no LMI. If you don't get the first homeowners grant, you'd need $11,464. But if you're building a new house and you get the first homeowners grant, you'd actually not need to put any savings in at all, subject to the bank's criteria. So potentially you'd actually end up with $3,536 using this scheme if you're doing a house and land package, for $450,000. So it's pretty wild. You could get in. It'll be interesting to see with the banks at the moment. Some of them do require at least to see 5% genuine savings. So I wonder if this one, and I guess we'll follow more coverage on that if they'll want to see at least that sort of 2% genuine savings. So if they're going to want you to show that you've got some savings there, I'll have to wait and see. But definitely an interesting one that effectively you're going to put no money down to use the scheme. Can both parents apply for the family home guarantee scheme? So again, according to singlemum.com.au, yes, both ex-partners for the same children can apply to the scheme according to a spokesperson for the Assistant Treasurer. Breakdown, if you want to know more, I'll include links below if you really want to get thick into the details. It's definitely much better than what's available on the government website, which is these 3 paragraphs. So we'll include a link. So finally, the government is increasing the cap on its First Home Super Saver scheme. So the scheme was introduced in 2017 with a maximum contribution of $30,000. So that's actually going to get revised from $30,000 to $50,000 in this new budget. So it's going to make a pretty big difference because, as you can see here, check out this calculator. It's probably my favorite one, CSV. I'll include the description in the tags below. But if you're on $70,000, you get the maximum sacrifice, say $15,000 a year. It reduces your take-home pay by $9,650 because obviously you're paying less tax effectively. But the awesome thing is, after 2 years, you can actually have saved $5,565 more than if you did it with your post-tax savings as per normal. So definitely a pretty awesome scheme and a really good calculator you can play with, because if you're not looking at buying in the next sort of 6 months, and you want to sort of have a play around and maybe you're looking at buying in the next 2, 3, 5 years, it can be pretty impactful. So it's definitely a scheme worth checking out and something really exciting, because then that maximum cap's going to get increased to $50,000. So definitely one to check out on the First Home Super Saver scheme and who it's good for, who it's not good for. So check it out. I'll include links to it below. The government also announced an additional 10,000 spots to be available on the First Home Loan Deposit scheme new home scheme extended for 2021 to 2022. So the criteria for that is you need to be either building a brand new home or buying a home that's never been lived in before. there's actually still spots available now. So if you're doing that and you're eligible, you should definitely check it out because there's still quite a number of spots available if you're buying this financial year. All the criteria there. I guess the good thing too, whether or not it's here, is the price caps are a bit higher than on the existing scheme. So it's a bit increased, like for example in Brisbane on the existing, it's all, here you go, New South Wales. For the existing homes, it's capped to 700,000 if you're in Sydney, capital city, or on the new home scheme, it's on 950. So it's obviously, a fair bit higher if you're doing the new home scheme, but the caveat being you got to be building and you can't be just buying land. You've got to be buying land and building at the same time. It's got to go all together, or you're going to be buying a home or a unit, that's never been lived in before. So good one still, could save you quite a bit on lender's mortgage insurance because the government is going to go be a guarantor. If you want more info on that, we've also got another video that covers it. So that's it for today, guys. Hope you enjoyed the video. If you did, give us a like or a thumbs up. Thanks for watching.